official.
Now it's official. We are ready to go. So we know we're all in holiday spend time right now. So we're kind of in this euphoric state where we're buying gifts for our family and friends because we all prepared. When we talked about this, back in September?
We sure did.
We talked about getting ready for the holidays. And so we really hope that you guys are finding the holidays not stressful, because that's what we really want for you. But now we want to get you ready, start kind of thinking about what you need to do to get ready for the new year. So
yeah, it's basically kind of making some plans now
Mhm.
before we are full on holiday, so that you can rest assured when you show back up in 2024, you've made some really good decisions leading into that new year.
Absolutely. And we want you to be there. So let's move forward. So Susan, did you know?
No, I did not.
Just a little over half of the consumers are planning on making finances a New Year's resolution.
Yeah, I know that so many of us look at the new year as kind of that time to have a clean slate, right?
Mhm.
Get back on the wagon, do all the things. And I would have thought this number would have been a little higher.
I was very surprised at
Okay,
this. So
okay.
I was very surprised, but I got to thinking, well, maybe it's because so many of us are more concerned about our weight than our finances.
We should do both. I'm gonna do this. And I'm gonna be getting on track with finances as well.
Yeah.
But 53% I thought was really interesting, but I also think that's encouraging. I think the reality is we all want to do better
Mhm.
and we want to maximize because we all work hard. So
Yes.
then how can you have what you pay for what you need and then still have money left over for the things you want?
Absolutely.
And I know
So
that's near and dear to your heart.
Yes, it is. And we're gonna talk about a few tips. What we're gonna do tonight is kind of give you tips about things we've been talking about all year, but just really start getting you thinking about them for 2024. Okay, it doesn't. All right. See if this is gonna. There we go. So what we want to hear from you guys and feel free to put them in the chat is, what are your financial resolutions? You know, some of the top three that we hear about are save money, pay down debt, because we're coming out of that big holiday spend time. And so a lot of times we're thinking about, I just want to pay down all that debt that I got over the holidays and maybe spend less money this next year.
And I think these are all good, but I will tell you, I think there's another thing we can think about is this the year to maybe flex your entrepreneurial thoughts, right? Is there an opportunity to have an opportunity to create another income stream that really can help you either save more money faster, pay down debt faster, or allow you to have money for a vacation or Christmas fund next year?
I think that is a perfect thing to talk about. And we're going to touch base later on things that to do for the next new year. And that's one of them is, what can I do to help myself with these things? And that's, a side hustle is really something to be thinking about as well. All right.
And then curious if you guys have a different or a specific, we're going to talk about that too.
Yes.
If you have a goal that you have for 2024, would you mind dropping it into the chat? Because we'd love to hear that too.
I'm going to minimize that for a bit. Anything in the chat yet, Liz?
Oh, yeah. All three of these things.
Okay.
Yeah.
These are the big things. They all agree that they all need to work on all three of these things.
I love that.
I love it. I love it.
Oh, and raise a credit score.
Yeah.
Yay for you. Good job.
Oh, raise your credit score. Paying down debt is a fast way to raise your credit score, along with making sure your payments are on time too. And we'll get there, but that was a good one. I love that.
That is a great one. Right. So tonight we're going to talk about setting financial goals, creating a spending plan, one of my favorite things, build or start your savings. So maybe it's an emergency fund, maybe it's your retirement, vacation, whatever kind of savings that you are looking at, and then preparing for tax season. Now, please know, we are not tax professionals. So when we're giving you tips on how to get ready, but you really need to reach out to the tax professionals for any specific questions you
That's right.
have. So SMART goals. I love SMART
I
goals.
do too.
But I will be honest. I think I just don't really use that. I don't sit down and say,
Yes.
I'm gonna go through my SMART goals.
Yes.
But when you're setting goals to be successful, really following this SMART goal diagram, it's so smart. I'm sorry, I had to say it. I couldn't.
I love that. Okay, that's a goodie. What I love about the SMART goal acronym is it's a framework.
Mhm.
So if you're very specific, and what is specific? All right, I've got a $3,000 balance. I want to get that paid for by June of 2024. That is measurable, it's attainable, it's relevant, right? Because if you want to pay down debt, and it's time bound.
Yes.
And you literally then have how many months, 6 months to put a plan together. And oftentimes we put goals out there without having a plan, a structure.
Mhm.
And then we're wondering, like, what the heck happened?
Yeah,
I was unsuccessful in my goal. But
Yes.
that's what I love about this, because then you can put these reminders on your calendar to remind you of the goal that you had. And here's what I know about it, is once you achieve one goal, it is so much easier to achieve other goals.
Absolutely.
The goals are everything.
And really keep this in mind as we're talking throughout the night, but not just about your finances, but think about how you can, all the goals that you want to set for yourself,
That's
how
right.
you can use these. And we would love to hear from all of you guys. Have you used SMART goals before, or do you think this will be something that you really want to try in the new year?
Yeah, I love that.
So Liz will be watching for those. Oh, sorry.
No, you're fine. You're good.
All right. So the spending plan, this is one of my favorite things, and we're going to look at the full diagram here in a minute, but why do we have a spending plan? So spending plan is really our version of a budget, which budgets can be really hard to follow, but a spending plan, once you have it set up, and it's so easy to follow and so easy to stick with, but setting one up it takes some time, right?
Right.
You need to look at the why behind your spend, where's your money going? And so looking at all the things that you have to have, a home, utilities, groceries, maybe childcare, that's a need. And looking at those, and then where's the rest of the money going?
That's right.
And how much are you applying to savings and debt repayment?
Perfect.
Setting your financial priorities, that's part of those goals that we're talking about tonight. And then setting up categories for them. So what we like to talk about is, and we'll look at it in a minute, is the 50, 30, 20. And those are your needs, your wants, and your savings. So those categories. Setting up a date with your money. And we've talked about this before.
We have.
Once a month, getting together, whether if you're married or you have a significant other or you're single, set up a date with your money once a month to take a look at where your money's gone.
And I would actually say that if you have a partner and you have a family and you have children, you can invite your children to play along too. I think
so
your
smart,
kids
yeah.
having that awareness of the goals that mom and dad have, or mom and mom, dad and dad, doesn't matter, just you as your family unit, your kids will help support your goals.
Absolutely.
And they'll get behind it. And what you then are creating is that next generation of awareness when it comes to money. And sometimes we want to shelter our children, even if there's hardships, but I actually think can really rally a family towards these goals by including your children.
You are so right, Susan. And when our kids understand why we say no, there's buy-in. There's not that fight, that argument, but not just saying, like, when I was growing up, my mom would just say it's not in the budget. Well, that told me nothing. I didn't understand what that meant.
That's right.
But when you include your kids in, here are all of our expenses, and here's what we're trying to put away for the future, and here's what's left over for the things that we can have. And so then helping them, getting them involved in what are we gonna do with the wants?
Yes. I love
Okay,
that.
so, and then always make sure you set aside time. This date with your money is an opportunity to adjust your spending plan. Is it working for you? Maybe it's not, and you can adjust it on a regular basis.
And Sheri's gonna share the kind of the percentages, and what I love about the percentages is they're flexible.
Yes, yeah,
So share a little bit about this, because I find the 50, 30, 20, and we've seen it in different percentiles too, is just easier to wrap your brain around instead of trying to identify every single penny and having to write everything down.
absolutely.
I just think this is just a macro way. You've got your salary that comes in, you just kind of parse it out. 50% goes here, 30% is here, 20% here. It's just easier to manage.
It absolutely is. And when you
You found
know
this
your bills are being paid and you're putting money away for savings, or you're paying off debt, and then you have money to do whatever you want with,
Wow.
you are less stressed.
You're less stressed, and I don't want you to feel judged. I don't want you to feel judgmental on your spend.
Right.
Because if you are in that free and clear 30%, that's your mad money. That's
Yes.
your money to go get whatever you want.
Absolutely.
Because we never want you to feel bad about spending money too. You're working hard. We just want you to have a real balance in life.
Exactly. And that's the whole key to this 50, 30, 20. It is not a hard 50, 30, 20, that 50% of your take-home pay is going towards your needs, and 30% is for your wants, and 20% is your savings. These are really guidelines. Now, what we would really like as coaches, we would highly recommend staying as close to possible to that 20% for savings.
Yes.
And this includes
Say it.
your retirement
Yes,
savings.
yes.
So if you are contributing to a 401k
That's
or
right.
an IRA or something, that amount is part of that 20%. So make sure you're including that.
So
Go ahead.
I wanted to share the other thing is when we talk about emergency funds, right? So, there's two emergency funds that I think about. There's the short-term emergency fund,
Mhm.
and how much money do you want in it?
I want 500 at least.
Oh, me
Yeah.
too. I want
Yeah.
500 too. So 500.
I've changed my ways.
You
Isn't it?
did.
Yeah, I've changed my ways.
I did. Oh, I beat her down after a year. But $500. So if you have a car breakdown or an emergency dental, you're not having to put that on your credit card.
Right.
That's a big deal.
It is.
And then the other one to plan for, could be a smart goal, is to plan for that long term. Guys, all you need to save are your needs.
Mhm.
Because if something happens and you're losing your income, you don't have to worry about your wants during that period. You don't have to worry about your savings, but you do want to have the money for your needs. So think about that from a 3 to 6 month period. And if you've got those two buckets and you're contributing to 401k, I want to hear just a big high five,
You're
because
golden.
you're golden.
You are.
You're golden.
Absolutely. Absolutely. And remember, depending on where you are in your life right now, if you're a young family and you've got childcare and things like that, your needs may look like 70%. And
That's right.
so you've got maybe 70 going towards your needs. Try to stick with that 20% in your savings and then adjust your wants. Granted, it's not always fun to adjust our wants, and when you're thinking wants, I'm thinking, look at your streaming apps, your
Mhm.
gaming apps, the things that you like to do for entertainment. Maybe cutting back on those a little bit, just because your needs may be taking more right now in this lifetime. If you're young and you're just getting started, and you may not have a lot of needs, so then you're like, okay, maybe I can contribute more to my savings right now, right? You see,
Get
like
ahead of the game.
Yeah, get ahead of the game. Let's see how I did that. It's
I
not
do,
about
I
the
see that.
wants.
I do
It's
see
more
that.
about the savings.
I do,
right?
I do that. We all have our, she's really good about that savings. And you know what I love about with Sheri is once you get excited about savings, you get the same sort of mental excitement as you do with buying something on sale.
Yes. Yes.
right? So sometimes we go shopping because we need a little dopamine hit.
Mhm.
Guess what? Y'all, you can get that by saving money too.
Yes, you
You
can.
just got to give it a try and then come back to us. And you'll be excited about saving money.
Yes, you will. We're going to talk a little bit more about some strategies for saving for sure. But this 50-30-20, great thing. If you want to learn more about it, go out to our financial wellness page and check out the resources there. There's an article from our financial wellness page about the 50-30-20 and how to get it set up. Also, check out, we've got a webinar that included that from earlier this year as well. So, all right, moving on. So paying down debt, that's a big one that a lot of people are going to want to set as a financial goal for next year. And there's different ways you can do that. Maybe it's a debt consolidation loan to get all those little things together into one manageable payment. Other things to think about that a lot of people don't think about is refinancing. One is an automobile.
That's right.
Even if you're still making payments on your car, consider going to your credit union or your other financial institution and talking to them about refinancing your automobile and taking the equity out in that, and using that equity in your car to pay off that high interest debt. You know why? Because even though auto loans are higher right now, they're still going to be lower than those high interest credit cards.
So the interesting thing about credit cards, because as interest rates rise, other products start to rise too. And you may not be aware that your Visa credit card that used to be 18-19% is probably more like 25 to 30%.
That's right.
I've actually seen them at 32%. Even if you have top tier credit, that credit score goal, and they're still increasing that. So your interest rate charges are quite higher. So to Sheri's point, even though an auto refinance may not intuitively make sense, if you have that equity in there and you're refinancing a car at 6% or 7%, that's still better than 30%.
Absolutely. Absolutely. And it's going to be much easier to pay it off. And if you are a credit union member and have a credit union loan, you can split your monthly payment up into by weekly payments, or weekly, depending on how you get paid. So when you do that, because we're based off simple interest, you are actually going to pay less interest and get that loan paid off faster. So
yeah, that's really smart.
that's a tip I want to share with all of our members and future members as well. Another is your home. Don't forget you have equity in your home. Consider maybe either refinancing or getting a home equity line of credit for that high interest debt. But my favorite way, and because you've got skin in the game on this one, is a debt snowball. And I love the debt snowball for the reason that as you pay this debt off, that dopamine you're talking about, it gets built with this. So this is where you take your high interest credit card. I'm using high interest credit cards as an example, but any high interest debt, any debt you have, you can do this with, and you figure out what your minimums are on all of them, and then look at your budget and say, how much extra can I squeeze out of my budget? Or maybe like you were talking about, it's time to think about your entrepreneurial skills and get that side hustle going and to help pay off this debt. But you start with that one and you increase your highest or your lowest balanced card, and you increase that as much as possible. And then you're paying all a little bit, the minimum on the rest. You pay that first one off and you take that $100 or whatever it is, and you put it on the second one. And then you continue to pay minimums on the others, and you just snowball it. And you would not believe how fast you're going to pay off that debt by doing this method. It is tried and true. I've done it with members before, and it's so exciting to when they see that on paper.
Oh my gosh,
and how they can do it. Now, here's the key. You cannot use these credit cards while you're doing this. It is very, very important. You cannot add balance to these credit cards. So emergency fund, that making sure you have money set aside.
Get that $500 going.
Get that $500 going. But if you want to try this, it is a great way number one, it's going to help you feel really good and accomplished. Number two, you're really going to think about the next time you take out another high interest credit card. Tip, if you're paying off credit cards, do not close them. Keep them open.
Don't close your credit cards. That history and having that available balance is what really helps boost your credit score.
Yes.
So my person out there that wants to boost your credit score, you do this and you start closing down those debts. Guess what? Your credit score will start increasing every single month.
Absolutely. Absolutely.
Sheri, I love this.
I do too.
I will tell you, I've really I've admired, I've been inspired by seeing you work with our members on the debt snowball. And to your point, the celebration that the members feel when they've accomplished something that they weren't sure they could do, but they were able to do it, I think really sets you on a path for real abundance moving forward.
Absolutely. It really does. All right. So we're going to talk about savings. I know we talked a little bit about savings, but now we're really going to get into the nitty gritty of, getting started on your savings, or maybe it's building your savings, right? Again, SMART goals, review your goals, take a look at where savings lands in those goals, and be specific about those goals. Make them measurable, attainable, not realistic. What's relevant. I knew that. And time bounds. And this is where
I think that's so important.
the time bound I love,
I do too.
because when you set a goal and you have a specific time frame that you want to meet that goal, it really helps you work towards it. And remember, short-term and long-term, like Susan was talking about with the emergency fund, and helping you get to those.
And remember, when you're making these goals and you're having a date with your money, I do think having a glass of wine or, a cocktail is probably nice too. Review your goals.
Yes.
Because it will help you stay on track and look at the progress that you've made and celebrate all the progress.
Exactly.
Any progress is good progress.
Absolutely.
And if there's a month that you don't have that, it's all good. Get back on a good cadence and you'll celebrate the next month.
Absolutely. And to Susan's point about if you get off track, don't beat yourself up.
Don't. That's
life happens.
For sure, man.
Just get, as soon as you can, get back on track, readjust your goals. And this is why that date with your money is so important.
And I'm going to do a special shout out. I don't know how many of you out there are parents and have littles at home. I'm telling you, it's tricky out there when you have littles. There's always these unexpected things. So especially that, don't judge yourself. Life happens. Get back on track the next month and everything's going to be just fine.
Absolutely. Good advice. I love making money on your money.
You got to talk about,
so
this is a Sheri Shannonism, making money on your money.
And this is, you want to keep your money in your savings. So make sure that your goals are attainable. The reason why is because when you leave money in your savings, you're making money on your money. Every time the interest is added to that savings account, that's increasing how much interest you're going to get the next month. So leave that money in so you can make money on your money, because that's free money.
That's the thing. You want to make money out of money. It's not just the new money coming in, it's the money that's already been there.
Yes.
And check out our website, look at our certificate of deposit, CDs, IRAs. We always have specials right now. There is some legit percentages out there to make some money on your money.
Yes, we've got some really great CDs.
Are we gonna tell them, are we gonna tease something at the end of the day? At the
We
end?
can.
I
We
think
can do
we
it.
should.
Oh, we should do a tease.
I think we should.
We should do a tease.
You stay with us.
Yeah, you stay with
We got
us.
some breaking news for you
Yeah,
at the
we've
end of
got
this.
some breaking news and you will only get it here.
Yep. You'll be the first.
So what kind of savings can you set up? Really, you can save money for anything, but just to get your juices flowing, one is your retirement. Save for your future. If you are just getting started in the work environment, you're young, you're not thinking about retirement, but believe me, 65 is going to be here before you know it. Start now, start small, because every little bit counts. And if you leave it alone, it is going to grow.
That's right.
You're going to be making money on your money during that time. If your employer does a match, make sure you're doing that
Because that's free money.
that is free money.
Mm.
Do not give that money away. If they're doing a 3% match, then you at least need to be contributing 3%. Otherwise, you are throwing away money that is a gift.
It's a gift.
It is. It's an absolute
I
gift.
love that.
Also, thinking about the new year, if you are contributing to a retirement fund, consider increasing it by 1% next year.
Mhm.
As you go every year, when you start the new year and you're going through your benefits enrollment, consider increasing your retirement contribution by 1%. Before you know it, you'll be at that max of 20% for the year. I think that's where we're at. I am not a tax expert and I am not a financial planning expert. So I will tell you, I think it's 20%. And then Christmas clubs and vacation clubs and emergency savings are all the types of savings we want you to be thinking about. One thing I do want to put a plug in for, if you are looking to start a savings account, we have a great jumpstart savings that's earning 2% interest, the best interest on a regular savings account.
And that's money you can take in and out.
Yes, that is money. It's not in a CD.
That's right. It's not
It
a
is
CD.
money, but we want you to make money on your money. So leave it in there and get that 2%. But you can start it with $1
That's right.
and up to between $1,000 and $5,000, you're going to earn 2% interest. It's a huge deal. Anything more is a CD, but the goal is to get you to start thinking about your emergency savings, your vacation, all the things that you want to save for and making good interest on it.
You know, and I'm going to put a plug in for our home banking. So if you have our mobile app and so many of you are members, you can add a savings account right from your mobile app and you can save for anything. I'm going to tell you, I have all of these, but I also have my auto loan, my auto repair.
Mhm.
Because, you know, I mean, I just want to have money saved for my tires. I want to have money saved for my oil change. So I have a little auto savings. It doesn't matter what it is. You can save for anything because you're not going to get charged for that savings account. Nobody needs to know what that savings account is. And you can do it from your phone. It's super duper easy.
It is. And then if you set up auto deposits.
Yes. Oh, that's smart.
And
And it's all on your phone.
Yeah, it's all on your phone and you can do it. So
It's like you got UICCU right on your phone.
absolutely.
go.
It makes it so easy. So a lot of things, if you haven't used our digital app, a lot of great things you can do out there. One other thing to get your savings started, if you're getting a tax refund, consider taking part of that tax refund and starting your savings account.
Love that.
Liz, do we have any comments or anything going on right now? Okay,
thank
great.
you.
Just wanted to do a quick check-in. All right, moving right along. So getting ready for tax season. Again, we are not tax experts. We just want to give you some tips on things to do to get yourself ready and organized. So it's getting together all those documents, making sure before you sit down with a tax professional, or maybe you're using an online version to help you, make sure you have all your stuff together, you know, all your forms. And you can, on our website, you can access some great tools from our financial wellness page on things to help you get ready. There's a getting your taxes prepared whole coaching session about all the documents and things you're going to need to get together. So W-2s and maybe it's, you know, your retirement funds, any investments you have. If you have kids, you're going to want to get together all the documents for that too.
Yeah, and if you have a tax professional, now is a good time to check in with them. Because we still have three more paychecks. And so they've redone the tax brackets and they should be very favorable for consumers, but it's worth a phone call. They'll probably want to see your most recent payment stub and just do some little calculations. So if you still want, if there are adjustments to be made, there's still time to make adjustments. So right now, if you have a tax professional, it's worth a phone call.
Oh, that's a great tip, Susan. I had no idea. That's great. So there you guys go. That's a great tip. Life changes.
So what's a life change?
getting married, having
Oh,
kids, maybe,
right.
or a divorce,
Mhm.
any life
That's
changes.
good.
You want to also be prepared for those when you're going to do your taxes. And if you've had those changes, or if you're just not sure about things, do reach out to a tax professional. They're there for you and to help you, and they will help you get the most out of your tax refunds. All right. Anything else? Any other tips and tricks on?
No, I think those are really good ones. I actually think it's really smart to have that top of mind because when we get into the new year, those W-2s, thank you. Those gonna start coming in, and just having a dedicated folder for all of those things is really good prep.
Yeah. Oh, and if you are a homeowner, you want to make sure you've got your taxes here for your home, and any escrow or insurance that you've paid throughout the year for your home.
Oh, we've got another person, just as I think we're almost
Well,
wrapping
yeah,
up.
I think we're getting ready to wrap up. So if you're just joining us, you will get the recording that will go out by the end of the week. We'll make sure you get that. But we are all done. But we would love any questions, comments from all of you. We would love to hear them. Feel free to put them in the chat. Anything? All right. Well,
Well,
hey guys, thank you.
celebrate, you guys
Yes.
got some good knowledge, and have a very happy Thanksgiving with your family and friends, and just so appreciate that you're here. If you're a member, extra thank you for being part of the credit union family. And if you're not a member and you have any questions at all, you give us a holler, and we're here for you with being a member or without being a member.
Absolutely. And we will look forward to seeing you next year. Look for